Okay, let's talk about a surprising financial world that's probably hidden right inside your phone right now. I'm talking about your loyalty points, for coffee, for flights, for basically everything. And you might just think of them as a simple discount, but what if I told you they're about to become a brand new tradable asset class? The numbers involved here are, well, they're staggering.
So let's just start with the big number, shall we? $500 billion. That is the estimated value of all the unspent loyalty points just floating around out there in the world. It's kind of like a shadow currency, and it's bigger than the entire economy of a lot of countries, just sitting there waiting for someone to figure out what to do with it.
So that brings us to a really interesting question. Just think about this for a second. What if the points you earn grabbing your morning coffee were just as valuable, just as easy to use as the frequent flyer miles that serious travelers hoard? That's the big idea we're going to unpack today.
To really understand where this is all going, we first have to look back. We need to see how one industry took their loyalty programs and turned them into a literal lifeline during a massive global crisis. And yeah, we're talking about the airlines.
So picture this. It's 2020, the world is locked down, and planes are just sitting on the tarmac. United Airlines needed cash, and they needed it fast. So they borrowed $6.8 billion. But here's the crazy part. They didn't borrow against their multi-billion-dollar fleet of jets. No, they borrowed against their Mileage Plus program. It was a wild move. And of course, Delta and American saw this and immediately followed, raising even more. American raised a record-breaking $10 billion.
So you're probably asking yourself, how on earth were these programs so valuable when the main business of flying was completely on life support? Well, it all comes down to one thing: profit. The profit margin on actually flying planes, it's razor thin, like 5%. But the margin on the loyalty program? A whopping 60%. It's basically a cash printing machine they have hidden in plain sight.
Okay, so this is the really fascinating part. How did they actually do it? How do you take an imaginary thing like miles and turn it into billions of dollars of cold, hard cash? Let's break down the financial playbook they used. Here is the absolute secret to the whole thing, the key that investors understood. Most of the money these loyalty programs make doesn't come from people flying, not even close. It comes from selling miles in bulk to partners, especially the credit card companies. And that cash flow is incredibly reliable because, let's face it, people keep swiping their credit cards even when they aren't traveling.
Now, this whole process has a fancy finance name: securitization. It sounds complicated, I know, but the basic idea is pretty simple. You take a stream of cash you know you're going to get in the future, in this case from selling miles, and you package it up and sell it to investors today for a lump sum.
So the airlines ran this really simple three-step play. Step 1, they put the loyalty program into its own separate company, basically building a financial fortress around it to protect it. Step 2, they pointed to their long-term contracts selling miles as proof of a guaranteed future cash flow. And then step 3, they took that guaranteed cash flow to investors and said, we'll use this as collateral to borrow billions. It was absolutely genius. And this is where it all pivots and gets really exciting for the rest of us. Because what the airlines did wasn't just some one-off trick. It was a proof of concept. It proved you could finance the future promise of loyalty, which opened up a huge question. Could you use that same idea to finance a present-day pool of rewards for everyone, from your local coffee shop to your favorite grocery store? To get there, you need a fundamental shift in how businesses think. For decades, companies saw points as a liability on their books, a marketing cost, a debt they owed to customers. The new view completely flips that. It sees those exact same points as a financeable asset, a source of actual capital. And one of the key ingredients here, the thing that makes investors really excited, is this idea called breakage. It's just the percentage of points that get handed out but are never ever redeemed. We all do it, right? And that 10 to 20% is pure built-in profit. It acts like a giant safety cushion for the whole system. So, if the airlines financed one company's future promises, how do you build a system that works for everyone? How do you take points from thousands of different shops and retailers and engineer them all into one big, stable, investable asset? Well, the heart of the system is something called a special purpose vehicle, or SPV. But forget the jargon. A much, much better way to think about it is as a firewalled piggy bank. It's a completely separate, protected company, and its only job is to buy, hold, and manage this giant diversified pool of rewards. So here's how this rewards bank actually works its magic. Let's walk through it.
First, the piggy bank, our SPV, takes investor money and goes on a huge shopping spree, buying rewards in bulk at a steep discount. Think millions of coffees, movie tickets, you name it. Second, it turns around and sells the rights to redeem those rewards to other companies, getting its cash back up front. Third, while it's holding all that cash waiting for you to redeem your points, that float is invested to earn even more money. And finally, the investors who put up the money in the first place, they get paid back from all the profits. It's a beautiful, self-sustaining system.
Okay, so now let's zoom all the way out. When you apply this model across the entire economy, you're not just creating a new asset for investors, you're actually creating a brand new, powerful network for exchanging value.
And what's really cool is this new network is a true win-win-win. For us, the consumers, our points suddenly become more like cash. They're no longer stuck at one store. For merchants, especially the smaller ones, they get instant access to amazing loyalty programs they could never afford on their own. And for the banks and investors, well, they get a brand new, stable, and really predictable asset class to put money into.
The ultimate vision here, the end game, is to create a clearinghouse for loyalty. Just think of it like the Visa or MasterCard network that processes all our card payments, or like a stock exchange for trades. It's a central hub where points from hundreds of different programs can all be swapped, settled, and used seamlessly. And that brings us to one last big thought. The financial plumbing for all of this is being built as we speak. The precedent has already been set. So the next time you scan your app to get a few points for your latte, ask yourself this: are you just getting a discount, or are you participating in a quiet financial revolution? Because that $500 billion shadow currency is stepping into the light. And the real question is, will your loyalty points be the next hot new asset traded on Wall Street?